Ajay Bagga on the show with us. So let's discuss what he's making of the market mood right now. Ajay, hi, afternoon. Good to have you on the show as always. What is it that you've made of the recent volatility? Is it just nervousness ahead of the elections?
Yeah, it's a combination of various factors, but I would say the big factor has been nervousness around the election outcome, and it is very difficult, to project with any degree of reliability what 98 crore voters will decide. Out of that, one third won't vote, so 63, 64% of them will vote, and a big chunk of votes still to go. And what we have seen is FII selling, which might be due to China coming back in favor due to the lower valuations, might be also a function of some money being taken off the table. But overall, I think India was more, it has fallen more because of domestic factors. The global situation was not warranting such a fall in India from about 22,800 all the way to sub 22,000. And I think this will continue till 4th June, till that evening when we get some clarity on the outcome. I don't see much traction for the markets until this very huge event is out of the way.
Saying sit on cash right now, don't deploy it just yet.
Yeah, I would say that for the marginal cash, no need to take money off the table. I think the India macro is strong enough. And what we have seen with previous elections, even a 2004 kind of a surprise, even then the markets rallied within 3 to 6 months. It was a different market. So even on worst case outcomes, the macro, the fundamentals finally went through. So not a time to take off money. India will do well, and the rest of the year we should do very well. But just this event might lead to some constrained investors, like foreign institutional investors, who might be taking money out. We have seen 29,000 crores in the secondary market going out in the first 13 days of May. So given that is happening, and it might continue for the rest of May, it might make sense to just stay on cash for the marginal amounts and wait out till the 4th.
Yeah, Vic's point though. I mean, the fact that we've snapped that 13 session gaining streak, but does it look like a durable move now? Has the trend reversed by any chance?
No, I think it's too early to say trend is reversed, but at least the pace of rally for India VIX, that's halted. Now, India VIX is bound to be staying at an elevated level. It's not as if that in the next 1 or 2 weeks we're expecting the India VIX to come down to 14, 15 odd levels. That should ideally happen only in the first week of June and post the event, out of the way. But at least if the India VIX doesn't rise up much higher, and we don't see that accelerated pace like what we had seen in the last 4-5 days, where almost on a daily basis there was a 100 basis point jump, 150 odd basis point jump for the India VIX from 17 to 21, 22, 21 and a half levels for the India VIX. So I think that pace halting itself is a sentiment booster for the markets, that at least we are now looking at the Nifty maybe not at 21,800 and not at 22,800, but somewhere in between 22,200 to 400 range.
Point taken. So that's the range that we're likely to follow, but India VIX is going to be elevated given the fact there's important event lined up ahead for us. But we also have the dealing room chatter coming in. Sharad has been working his phones to help us find out what exactly is the chatter like in the dealing rooms today. Sharad, tell us what are the findings?
Well, yes, what we are hearing from dealers is that GE Shipping, there is a sustained buying coming in from a domestic institution for second straight day. And the volumes have picked up, and interestingly, 20 lakh shares, that's roughly 1.4% equity, has exchanged hands in today's trade. Now, yesterday's trade also, Gisalo Market Fund had actually acquired 20 lakh shares, while the seller was Nalanda Capital. And interestingly, the key DIs already invested in the company include the names such as SDFC Mutual Fund and ICICI Pru Mutual Fund. An important trigger for the company is, of course, the company is rallying because of strong Q4 numbers and commentary coming from the management, and also channel checks are suggesting that the company is expecting delivery of 2 MR product vessels soon. Also, apart from this, dealers are stating that certain buying is happening in HNI counters across the shipping stocks, and 2 important triggers for it is the high global tanker rates And also the Baltic Dry Index is something which we track, that is up almost 30% from the March lows as well.
Okay, Sharad, thanks so much for that. And GE Shipping has been having a good couple of trading sessions. Yesterday was, of course, attributed to the earnings reaction, but I think today as well, that stock is holding up quite well. Separately, in terms of the MSCI data, that's something to watch out for. We'll only get the announcement late, earlier tomorrow morning, and the flows will come in at the end of the month. But the street has already started penciling in what kind of inflows and outflows are expected, and which are the stocks which are likely to be in focus ahead of that. Let's take it across to Somit to get that list going. Hi, Somit.
The MSCI announcement for May Rejig is expected to come in, and the adjustments regarding this inclusion and exclusions will happen on May 31st. So, few stocks that we need to keep an eye out for. Firstly, it's PB Fintech, Phoenix Mill, Indus Stars, and Sundaram Finance. Now, these companies are expected to see an inflow of anywhere between 200 to 240 million US dollars. Apart from that, it's NHPC, Torrent Power, Mankind Pharma, Solar Industries, Jindal Stainless, and Bosch, which could see an inflow of anywhere between 150 to 200 million US dollars. And lastly, there is Canara Bank, Thermax, and JSW Energy, which could see an inflow of anywhere between 115 to 150 million US dollars. On the exclusion side, only 4 stocks to keep an eye out for. Firstly, Bandhan Bank, which could see an outflow of close to 107 million US dollars. Berger Paints, IGL, and Paytm also on the potential exclusion list, and outflows because of that could be anywhere between 80 to 103 million US dollars. So keep an eye out for these stocks on the back of MSCI May Rejig, which will be the announcement for which will come out tomorrow early morning pre-market.
That's the MSCI shuffle. In the meantime, we're going to take a very quick break. Come right back. We'll continue tracking markets.
Welcome back. Earnings for AIA Engineers at the bottom of the screen doesn't look exceptionally, strong, but overall the margins have improved, and it looks like a steady state kind of earnings that they have posted this time around. Ajay Bagga is still with us. Ajay, wanted to understand from you the private banking space. When do you see a recovery there? Because the earnings haven't been disappointing as such. The valuations are clearly attractive. When do you expect a reversal, and what should investors do if they are having these stocks in their portfolio?
We have to hold on. These are very good quality names. We have had stock-specific moves or the RBI proposal on the project financing, which again does not impact the private sector banks so much, because we don't have those DFIs in the private sector anymore. They've all converted into universal banks, and they're more retail focus and top corporate focus kind of players. So overall, in the year when the interest rates plateau and then interest rate cuts come, the banks, NIMs tend to compress, because the deposits are getting much faster repriced while the loan books are growing. So it's the cost of funds which is leading to NIM compression. It's not due to any credit costs or NPA issues. NPAs are at historic lows. And as the India growth kicks in with the new government and the union budget coming in July, you will see again these segments coming back into focus and getting bought into. So I would say hold on and stay the course with the private sector banks.
Stay the course with the private sector banks. That's the word coming in from Ajay right now. But Ajay, since you were talking about deploying cash once the event uncertainty is over, what are the pockets which are looking interesting right now, basis the earnings that we've seen so far and even the valuations that these sectors are at?
See, again, the high growth sectors, the valuations is an issue, Aisha. You are spot on that. Say something like railways, defense would be very favored, but you would have to question the valuations, and that's why maybe wait for the budget. But what I think is going to happen is June 5th onwards, once there is clarity, people will start buying, focusing into the budget. And as happens in every December, January, railways, defense, I think all public sector undertakings, those stocks will start rallying. So if any positions on a high risk basis need to be taken, these sectors could be looked at. Post the budget, the factors that remain, they should be a continuity with the last 10 years. So you should see infrastructure, capital goods doing very well. FMCG has been a beneficiary. The untold expenditure of a national election is about 60,000 crores, and that money comes into the economy. It gets distributed out on consumption by political parties of various services or actual dole outs to voters. And that gives a very big boost to FMCG mostly. And we have seen the market very smartly has been buying into FMCG. I think we could see some of that. One more factor hovering over the markets is the monsoon. So, how soon does it set into Kerala? And then, what does the IMD say in its June prognosis of the monsoon? I think that will determine how the FMCG moves. But factors will remain the same. So I would say financials, railway, defense, or with the caveat of valuations, infra, capital goods, and then FMCG coming back into the picture, given the kind of boost, the unofficial stimulus that's come into the rural economy and the poorer segments of the economy.
Okay, point taken. We'll watch out for all of that. But in the meantime, what else is happening in the market? It's actually holding on to gains. I think that's the biggest takeaway. Even if we're off that 22,250 mark, we're holding on to 22,200, and India VIX continues to be quite sluggish. UPL is down, and so is Tube Investments. Piramal Pharma has also taken a knock, and Cipla too. You talked about a whole host of sectors, Ajay, but let me take it across to Naresh now and talk about pharma a bit. Naresh, what's the view on pharma? Which are the charts that look the strongest to you?
So in terms of strength, we've seen Aurobindo Pharma show good strength, but we've not seen follow-up. So yesterday, the stock broke out into new all-time highs, and then we've not seen a follow-up even today. But overall, the structure is still positive. Then Sun Pharma is the next one, which has clearly shown resilience, and it has consolidated for the last 3-4 months. And for the last 2 weeks, the stock is consolidating in a very tight range. Today, that range seems to be taken out. So that is the next one. So out there, these are the two names which look interesting. There have been no major follow-up action in a Lupin breakout or a Cipla breakout, but those two would be on radar as well. So as of now, today looks like a day where we've not seen follow-up, but Sun Pharma and Oro Pharma look interesting.
Okay, Sun Pharma, Oro Pharma, these are the stocks to watch out for. In the meantime, we are also watching out for what the mutual fund activity has been of late. Which are the stocks that they've bought, they're sold? Are they trimming positions still on IT, or are they adding weights to the private banks? Let's take it across to Snehi to find more information on that one. Hi, Snehi.
Let's take a look at all the mutual fund activity in the month of April. Now, mutual funds have deployed 18,900 crores rupees in the Indian markets compared to 22,600 that we did see coming in March. So a slight bit of a drop on that front. They've added exposure in financials, metals and telecom on a consensus basis. And even when you compare this with the previous month, financials continue to be an add for mutual funds all across. They've reduced exposure in IT, healthcare and oil and gas. And even compared to March, IT continues to be on the reduced side. Cash level was at 4.2% of AUM in April versus 4.4% of AUM in March 2024. Now let's get a little stock specific and see what they have added and removed from their portfolio when it comes to the large cap pack. On the buy side, you have names like PNB, Kotak Mahindra Bank, Zomato, Power Grid as well as Axis Bank, and on the sell side, you have names like Geo Financial, SBI, BEL, Tata Steel as well as ITC. What we have noted an interesting move over here is that BEL has moved from the sell side to the buy side over the course of just 1 month. In March, it was towards the sell side and now towards the buy side, and now it has come towards the sell side. Now, in terms of mid-cap, the list of mid-cap stocks that they've bought and sold, on the buy side, you have Suzlon, SAIL, GMR Airports, Ashok Leyland as well as NMDC, and on the sell side, you have Vodafone Idea, NHPC, Federal Bank, IDFC First as well as Exide. Interesting to note is that Suzlon and SAIL continue to remain on the buy buy side. Ashok Leyland now this time has moved from the sell side in March to the buy side in April, and Vodafone, NHPC and Federal Bank continue to remain on the sell side for these mutual funds. Lastly, let's also take a look at the small cap portfolio then, and on the buy side you have the likes of Sterlite Tech, SBFC Finance, NACL, City Union Bank as well as IEX, and on the sell side you have TV18 Broadcast, IRB Infra, NMDC Steel, Marksons Pharma as well as Aster DM. So well, that's a snapshot of largely all the mutual fund activity that we've seen in the month of April.
Snehi, thanks for highlighting what mutual funds have been buying and selling, but let's figure out what we can buy today and sell tomorrow. Kunal, what's on your list?
So TVS Motors is something which looks attractive. The stock is forming a triangular pattern breakout around the 2130-40 mark. So would suggest a buy with an immediate target of 20 to 20, and stop loss could be kept at 2070. And Ashok Leyland has also confirmed a breakout today above the previous highs. 205 approximately was the previous high for the stock. It's managed to confirm a breakout today. So expecting a further up move, targets of 220, stop loss at 194.
Right. Naresh, what about your BTST ideas?
So first would be a buy on Tata Steel, looks promising here, stop loss at 163, target price of 172. Second is a buy on Ashok Leyland, a new 52-week high, clear-cut outperformance, a new leader in the space, expecting it to continue, stop loss at 202, target price of 210.
Point taken. So Tata Steel clearly is that one stock that Naresh likes at this point of time. We were waiting back for more details on MSCI. It will come tomorrow morning, that is May 15th morning. But exclusion stocks are the ones which are likely to be in focus. So Bandhan, Berger, IGL, Paytm. These are the stocks which will be perhaps excluded. While PB Fintechs, Phoenix, Indus, Sundaram Finance, these could be some of the names which could be on the radar on account of addition, and the inflows are expected northwards of almost $200 million. Torrent Power, Mankind Pharma, Solar Industries, Bosch, Canara Bank, Thermax, JSW Energy. These are some of the other candidates, and we'll keep tracking as and when the announcement is made public later tomorrow morning. But in terms of the market mood right now, I think Reliance is one stock which is pretty much holding one end of the market. So that's doing quite okay. It's 2840 right now. L&T has been above the mark of 3300. M&M has been doing quite well. In fact, M&M is actually up 4%. Let's pull up that chart. Yes, actually it's up 4%. The stock is expected to report its earnings this week itself. And maybe given the fact rest of the auto pack has supported the sentiment and has reported a number which was better than street estimates, maybe the street is penciling in a similar story for M&M. Ajay, would that be a fair assessment for M&M, though it's not as much into those rural plays in terms of two-wheelers? Of course, it has a tractor portfolio, but what's your verdict on some of these auto stocks?
It's looking very good, and auto will be an outperform even going ahead. Quite positive on auto. And as the rural demand, catches up, you will see two-wheeler players also doing well. And right now, the PV players are well positioned. We have seen pretty good results so far. The market action has been disappointing post that, because it got factored in to a large extent. So how much is already in the price is the question you have to ask. Otherwise, you could have a small fall post very good numbers, as we have seen in some of the auto stocks.
Okay, that's the take coming in on some of the moving, market names. But Ajay, just wanted to understand, what is it that you're doing with, the chemical space right now? Because many believe that, some of these names could well be closer to a bottom, while analysts are expecting industry headwinds to continue well into FY25. The commentary seems to be, at least from UPL, seems to be hinting towards a turnaround this financial itself.
Looking like we have seen the worst, but China remains the big issue. It is undercutting pricing on every segment in the chemical space. So that is the big issue for everybody. The basic chemical suppliers into China, like the European biggies, are doing well because that end demand is recovering. But how much of that end demand will our players be able to get is the big question. The import substitution that is happening, that is good. That will help certain segments. But I think we are about 2 quarters away before we get clarity. And what chemical players have been doing is taking a lot of cost outs. So they are trying to become more productive. and that will start showing in the bottom line first, and the headline numbers will take about 2 quarters to really show up. And China remains an imponderable. It is 10 times our scale, and it's not going to cede territory that easily. They have a stated strategy of hollowing out countries by just using their oversupply to kill off competition. That remains, I think, the biggest issue.
Well, it's the volatility as well, as we are now done with the phase 4 of the elections, which is in full swing. So we try to understand with a lot of experts as to what should be the key themes around elections, or what is it that we should avoid completely. Hear it out from Hiren Ved, Nilesh Shah, as well as Sunil Singhania.
We've been very bullish on real estate as well. As you know, there were no real estate companies in the early 2000s that were listed. They all got listed in the later, and then at the peak of that cycle in 2008, the total market cap of real estate was about 7% of the total market cap. From 7%, we went down to 0.6% just pre-COVID. And from 0.6, we've just gone up to 1.8, 1.9. I mean, if we are going to talk about a 10 trillion economy, don't you think real estate companies will have some market cap?
This huge focus on railways, it is expected that next 5 years, almost 10 to 12 lakh crores will be spent on railways. We have seen the fruits of Vande Bharat being run and how people are loving it. The first bullet train, hopefully between Mumbai and Ahmedabad, should be up and running in the next 2 years, which should encourage many more cities to be connected. So infrastructure, if the country has to grow to 7 trillion and beyond, I think there is going to be a focus on infrastructure.
The EMI space, which is energy, manufacturing, infra. These are essentially, and if you ask me...
That's the acronym I was looking for, EMI.
EMI. So
energy, manufacturing and
infrastructure.
Okay.
That's it. These are the three things. And then you could probably add a bit of defense there. Railways, I'm putting it as part of infrastructure. So if you look at that. So that last bucket didn't exist 5 years back. Okay. It has come into prominence in the last 2-3 years. But my view is that this is now going to be a journey over the next 10-20 years.
Okay, so infrastructure, real estate, energy, manufacturing, these are the big themes that all our guests are talking about. But in the meantime, we have the markets which is just closing towards the last 3 minutes of the trading session, and it's not a bad day at all for the bulls after the kind of dropping that they have seen in the week gone by. This 22,200 level is something clearly which they would like. The earnings for Kirloskar brothers were out, and let's pull up the intraday chart because the stock had run up quite substantially in the last few minutes itself since it's reported its earnings. The overall profitability has jumped up quite substantially, though the revenue growth is just 8-9%. I think it's the profit figure which has jumped up by 57% on a year-on-year basis, and that's driving that kind of reaction with the stock inching higher by almost 7 to 8%. But yes, we are wrapping up the day, and the bulk of the gainers include names like Reliance, L&T as well as M&M. These are the stocks that piled on gains of over 60 to 70 points. Almost half of the gains in the Nifty today were contributed by 3 of these majors. All of these names as well as the closing plates will come up for you on the screen. On the losing side, however, ICICI Bank was under pressure. TCS goes home with a bit of a red. In terms of the various sectors and the stock performance, metals was clearly shining. So a NALCO, a SAIL, a Vedanta, a JSPL, NMDC, all of these stocks were up anywhere between 4 to 6%, and that was closely followed by auto because M&M was clearly fairly excited in the fast lane with 4% gain. Bosch as well seeing quite a bit of power, 4% higher. TVS, Hero were the other big gainers in the overall auto pack. The advance decline ratio overall wasn't too bad at all. In fact, 1800 stocks advancing to 600 stocks declining. That's not bad after the kind of volatility that we have seen. But talking about volatility, India VIX managed to snap that 13-day gaining streak and finally ended today with a bit of a red. So a breather coming in there, still around 20, but at least not further weakening of the VIX at least, and that's something to take heart from. Bank Nifty also had a decent day. In fact, the Bank Nifty managed to outperform quite a bit if I have it right. Okay, no, so by end of the trading session, it actually flattened out, just a 0.2% gain on the Bank Nifty. And I think the pressure came from some of those heavy banks. The names of ICICI Bank come to mind. Even Axis, for that matter, was in the red. And then some of the PSU banks also did not do quite well. So Union Bank as well as Bank of India continue to be in red. The shipyard and the defense companies also deserve mention. So a Garden Reach, a Mazgaon Dock, a Cochin Shipyard, all of these stocks were doing quite well. You also had a Railtel Corp up there. Engineers India was reacting positively. Godfrey Phillips was also in news. And then HG Infrastructure was high by around 15%. On the losing side, UPL, Cipla, Zomato, these were the biggest news makers. But that's how we have wrapped up the trading session. Thanks so much for joining us. We'll see you tomorrow morning.
If you like this video, then like, share and subscribe to ET Now.